Guys, again, this is the second recording for the day. Just 1 hour to go until the opening on the New York for the New York equity markets. Early traders already started to come in from America, and we had quite a bearish session for the majors today. Bearish in the sense that euro dollar, Aussie, cable, Great Britain pound, US dollar all corrected lower after yesterday, let's say, advanced to the upside, and even this morning moved to the upside. They just corrected lower for almost for the entire London session since now. So still having let's say more than 3 hours from the London session, New York preparing to come in, and I would like to take a look now at the Great Britain pound US dollar. This is a 4-hour chart for the Great Britain pound US dollar, and the reason I want you to see this chart is that the structure here looks really nice in terms of a possible ABC and an X wave already in place. So it might we might have a bounce from these levels. Also important to know that that cable, Great Britain pound US dollar, actually was hardly influenced today, and you see the sharp move, the sharp sell-off here, hardly influenced by the CPI in the United Kingdom, which came lower than expectations. Of course that it came lower than expectations. I mean, what do you expect when all over the world inflation is not an issue? So there are disinflation issues all over the world. So UK probably, I mean, it was most likely not to be a part out of that trend. As a result, flows started towards the euro Great Britain pound, which attempts towards the 85 now, and cable was correcting lower. But there is always a but. Shark is waiting at the gate for potential buyers. And let's try to look a little bit at this pair. These are the highs, and these are the lows, and these are the highs for Great Britain pound US dollar. This is a 4-hour chart, remember. Now normally I would be inclined to say that this is a leading diagonal with 1, 2, 3, 4, 5. But even in a leading diagonal, the third wave cannot be the shortest one. So as you can see here, if you measure the length of the third wave, like this, and then you project it to the upside for the fifth wave, like this, then you see that it's shorter than the fifth wave, so the leading diagonal scenario is out of the question. But if you come to think that on a higher time frames, namely weekly, we are in a possible contracting triangle with A, B, C, V, so looking for a new leg to the upside, then if there is a case for a contracting triangle, that what I would like to see is that this most likely is only the end of an A wave of a higher degree. So let's make it 12 and red. Then the B wave here. And the C wave to the upside like this. So to have already an A, B, C, and probably the move to the downside here to be an X wave. So A, B, C. Now, if this is an A, now this looks like a nice leading diagonal with the first wave being the longest one. Here you have of a lower degree, you have a nice impulsive move that respects all the rules of an impulse. So I would say that this is a one of a really lower degree. So 1, 2, 3, 4, and 5. So 1, 2, 3, 4, 5, and this 5 waves to the upside actually to make only wave 1 of a higher degree, so 1, and let's make it 10 and black. Then a nice correction as a flat. This is being called a flat with an A, B, and C. That will make the second wave. And most likely the third wave to the upside here. A small correction for a fourth wave in the form of a contracting triangle as a continuation pattern. And the fifth wave to the upside. So you have 1, 2, 3, 4, 5. This is being called a leading diagonal for wave A red, and the leading diagonal boundaries. The leading diagonal boundaries are this one. So this is the upper trend line. As you can see, it is not being pierced by the fifth wave, which is normal for leading diagonals. And from the second wave till the end of the fourth wave here. So this is a leading diagonal for wave A red. Let's write down that this is being called leading diagonal for wave A red. A rising wedge. Rising wedges are falling, and as you can see, you have here the B wave that goes to the downside. If you take a Fibonacci retracement tool from the lows of wave A red and to the highs here, you see that the level of retracement is 38.2. Where 38.2 is a typical level for B waves, and most likely from that moment on we started to build energy to go to the upside. This, what you're having here, is a small triangle of this is a small triangle as a reversal pattern. Why is a reversal pattern? Because price is coming from the upside and breaks into the same direction. This is a reversal pattern, and normally previous highs are being taken. As you can see here, the previous highs are being taken. Now what I would do here, I would take a trend line and put it at the top of wave A. A horizontal line at the top of wave A like this. So on a bounce to the upside, 154.11 normally should prove a little bit of resistance now. And from the end of wave A here to the end of the B wave here, most likely we have a double correction with an A wave here. So this to be A, B, C, then an X wave to the upside. So this is the first correction connected with an X wave, and another A, B, C, D, E for a triangle here, and the B wave ends here. Now if the B wave ends here, then we have a nice impulsive move to the upside for the C wave. So 1, 2. I'm not going to put now the A, B, C, D, E of color black here because I will make the chart look just too crowded. 3, and the fourth wave here, and then the fifth wave here. So 1, 2, 3, 4, 5 for the end of the C wave, and you have A, B, C move for this leg to the upside. Normally, this is an X wave. If you judge by the amplitude of the corrections and how it is channeling. So if you take a channel like this, okay, You see that it is channeling quite well. The corrections are almost the same. So what to look next is to look for a break to the upside out of this channel, and that would make the bottom for the X wave to the downside. And what to look next, of course, is being part of a leg of a triangle of a higher degree on cable. Then look for another sequence on ABC. One more important thing: if you take a Fibonacci retracement and measure wave A, and if you take 61.8 out of the length of wave A, and you project it by the end of the B wave here, of this move here, then you have almost the top for the projected price for the C wave as being 61.8 out of wave A. Now this may not seem important right now, but in the case this analysis is proving to be right, and cable turns to the upside like this, we can use this kind of projection for the next leg to the upside, as they usually keep the proportions when they are being part of a leg of a triangle. Now if you measure the entire leg, the entire C leg, entire ABC move, and you are seeing that we are somewhere in the 61.8, it doesn't really tell us something. I don't think that this is a second wave, but just a correction for an X wave and looking for a new move to the upside. So let's just write here that C wave red is 61.8% out of wave A red, typical for C wave. So until next time, I will also have another recording today before New York close, and after London is out of the picture today. We will see, depending on how price is moving. Maybe we will look at the euro dollar, maybe we will look at the Australian dollar. It depends. It remains to be seen. So until then, until later, stay safe on the markets, and